Why do most people lose money trading crypto? Today we're going to cover the 6 biggest reasons that most people lose over 90% of their money trading Bitcoin and how you can avoid making the same mistakes. Make sure that you watch the entire video so that you don't miss out on any important information that will help you to stop making these mistakes for yourself. I do need to stress that I'm not a financial advisor. The information here is for educational purposes only. I strongly urge you to consult your own financial advisor before making any financial decisions. My name is Nasser. I've been an online entrepreneur since 2008. I've been trading the financial markets for over 20 years. I want to help you to improve your productivity, your health and wealth to lead a better life. Bitcoin is the currency of the 21st century. It's captured the imagination of governments, people, business, entrepreneurs alike, promising a new era of financial exchange. But in recent history, it's experienced several big bubbles and huge crashes. Now, I don't particularly want to pick on Ali Abdaal. Actually, I'm going to pick on him today. But just for the record, I think Ali is a fantastic guy, highly intelligent. He's made a recent video on Bitcoin and we're going to go over that a little bit. Now, clearly Ali is a highly intelligent chap. Got a first in Cambridge, doing medicine or kicking off a wildly successful YouTube channel, along with the fact that I really do think he's a very cool guy. But let's take a look at what happened here. And I'm just going to show a few clips of Ali's video, and the link to Ali's video is below in the description.
I poured most of my savings into Bitcoin during the 2017 bubble. By the end of that year, I'd invested $88,000 into Bitcoin, and within a few weeks, I'd lost over $55,000 of it. This was a pretty interesting time for me in my life. I was preparing for my final year medical school exams at Cambridge University. I was doing this YouTube stuff on the side, and I was watching around 90% of the savings that I'd built up through 5 years of running a business in med school. I was watching those like go up in flames.
So in a nutshell, why did Ali invest? When people want to pile their life savings or a huge chunk of their cash into something like crypto, they're looking to make some quick money. Now, again, in defense of Ali, if you look at his recent investment history, I think he's put another video out where obviously he's in a very healthy position. But the point of this video really is kind of decisions are made by many. So lesson number 1. Now, this is the first and biggest problem most people have when it comes to crypto. They think it is fast and easy money. I've been investing for over 20 years, and one thing I can tell you is that there's no such thing as easy, fast money. Even those here to make money fast have spent years getting ready for that particular time. You have to have a long-term view. Also, for me personally, crypto is what I consider to be highly speculative. I do believe crypto is a very good place to invest. I think it's going to go a lot higher in value, but I'd put money into crypto that I can afford to lose. Lesson number 2. Now back to Ali. Now this is the last time I'm going to pick on him, but it's a really useful point. Now, Ali is a junior doctor, highly intelligent person, but now to become a junior doctor or doctor takes maybe 5 to 7 years in med school, not including the time before that studying, and it's only after that that you get to the point where you can be a doctor. Well, I see this so many times that people who are experts in one particular profession decide they want to try trading. Now, it takes 5 to 7 years to become a really good doctor. Well, you can't do that in a couple of weeks or taking a few courses and suddenly become an accomplished crypto investor or a trading expert. So the lesson here is stick to what you're good at. If you're going to try something new, don't expect to be an overnight success and don't risk the farm on. Lesson number 3. One of the first mistakes that beginners often make is to buy at the height and sell low, which really is the exact opposite of what you want to do. The reason that people do this is what's called FOMO, fear of missing out. People see the price rising, think, oh, I've got to get in, I've got to get in, got to get in. And what happens is they buy just as the market is about to dip. The market starts to dip, and guess what? They've lost a lot of money, they panic, and what happens is they take a huge loss, and then the market comes up again. So how do you avoid this? Well, remember lesson number 1, which was plan for the long term. Now, one way of doing this is what's called dollar cost averaging, or DCA. So how does that work? Well, if you had a total investment of, let's say, $1,000, instead of investing $1,000 in a single shot, what you would be doing is spreading the buy orders, the entry into the market, over a period of hours, preferably days or even weeks. And that means that if you were to buy at the top and the market starts to dump, you still got a lot of your investment intact, and you can buy at a better average price, which shields you from the volatility and the spikes in the market. Lesson number 4. People buy coins because they are cheap. And the logic usually goes something like this. Hey, I'm going to buy this new dude coin or whatever the latest one is because it's really, really cheap. It's way cheaper than Bitcoin, right? Well, there could be any number of reasons why the coin is so cheap. It could be what's called a pump and dump scheme, where some strange people have decided just to put a coin up there, make it go up really quickly and get their money out. New and especially cheap coins can very easily go to zero. You need to be prepared for that. Just because the price of a coin is really, really low, cheap, doesn't mean it's a good buy. So you need to do your research really carefully. Look at the background behind the coin, look at the amount of coins in circulation, the supply, and a number of other factors before buying the coin. Lesson number 5, do not use leverage. Leverage is where you can make much more money and, more importantly, lose much more money than your actual investment. People think that because they used $100 to make $2,500, they are bulletproof. Well, I've seen this time and time again, that nobody is bulletproof. Leverage trading is very risky and you will lose money sooner or later. Lesson number 6, diversification. Do not put all of your investment into one or even two coins. Again, I'm not a financial advisor. This is just I would do and other seasoned investors do. Stating the obvious, every single coin can disappear and go to zero. Spread your investment across multiple coins. And the final and bonus lesson, safety of funds. You need to be very careful in the world of crypto. It's common to hear that people either lose their passwords, their wallet address, or some of the small exchanges or less scrupulous institutions will simply have money disappear. I've made another video on how people have lost money with so-called accidents in crypto. The link is below, make sure you check it out. In summary guys, money is not easy to earn. Take care and protect it. Stay safe and I'll catch up with you soon.